Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. So when it comes to talking about the financial management of a business, I hear the terms cash flow and profitability a lot, and I use them a lot. And the key thing I notice is that they're being used interchangeably. So when a client comes to me and they say, I'm worried about our profitability, or somebody says, I'm worried about our cash flow, I don't always know that they mean the term they're using. So I wanted to take some time to break down the difference between profit and cash flow so you understand. But also, this will help you immensely with identifying and speaking to the exact cause of any issues that you're having in your business financially, to be able to know which of these two things is the problem or which of these two things needs improvement, and be able to zero in on this and ask for what you need from a professional in a way that they understand. So, profit versus cash flow. I think this is most commonly understood. Profit fundamentally is revenue minus expenses equals profit, right? It's what's left over of what you sold after you spent all your expenses. It's a simple concept in theory. Your profitability is functionally your excess of what you have to take home that's generated from your operations. This is key. Generated from your operations. So profit is the result of what your business has produced in terms of money, all things considered, income and expenses. So how does that differ from cash flow? Okay. You're probably thinking, okay, Shannon, that sounds a hell of a lot like cash flow. It does, but there's a really key difference here. So cash flow injects a couple of other things into it. Cash flow, number one, is not only related to operations. Cash flow represents the net impact of every reason your bank account will go up or go down in its cash balance. That is not the same as profit. Profit is only one of several reasons that your bank account will go up or go down. The other reasons, which you can think of if you're going, what are the other reasons? Well, think about this: paying down your credit cards. That doesn't actually change your profit. Your profit goes down when you swipe the card and you record an expense. So if you swipe your card at a store and that expense gets registered into your books and into your profit and loss statement, then you actually paying off that card actually does nothing in your books, believe it or not. Well, nothing in your P&L, I should say. Think about that. Loan payments, right? Paying yourself in distributions or draws by simply moving money, moving, parts of your profit from your business account to your personal account. That actually has no bearing on your profit and loss or your profitability. It's you taking the profit and moving it to another bank account. And similarly, if you put money in, right, or if you get a capital injection from an investor, from debt financing, from a line of credit, and so on, those things were not the result of the operations of your business. They're not income and they're not expenses. They're simply the movement of capital between bank accounts, and they don't trigger any new events. So when you look at cash flow is simply the net impact of movement in and out of your bank account. And the reason why cash flow is so powerful is because cash flow shines a light on the common blind spots of why you have no money in your bank account and yet you are profitable. Hey there, are you on LinkedIn? I love connecting with listeners and other professionals and business owners on that platform. I gotta say, I'm really enjoying it. So if we're not already connected, make sure you send me a connection request after this episode. You can be profitable and have shitty cash flow because you could be profitable and you could be then paying yourself, paying off loans, financing things. And then you're like, where'd all my money go? And it's like all of that went out in debt payments. But the kicker here is when your accountant sends you a profit and loss statement at the end of the month or end of the year, those things don't make the profit go down because profit conceptually, again, is only looking at it from the lens of income generated from your customers and expenses generated from the need to serve them. So if these financing activities, if you will, these investments that are coming in, these are not the direct result of the operations of your business, but simply people funding the capital. I hope that makes sense. And those will be different than profit. So cash flow, in my opinion, is a more multidimensional view of the business's financial health. Because at the end of the day, if you don't have money in the bank account, well, then it doesn't matter how profitable you are on paper because you won't be able to afford to say yes to things. You won't be able to make payroll. And that's key. And I think that it goes overlooked a lot, this idea of cash flow, because it's a concept that most business owners aren't taught. And sure as hell, the accountant is probably not giving you a statement of cash flows every month. It's one of the hardest financial statements to understand if you haven't been trained on it. So I would ask you, if you have the opportunity, if you're working with somebody right now, if you have the opportunity, even if it's not a CFO, ask them for the statement of cash flows in addition to your profit and loss and balance sheet. This is the third financial statement, by the way, that's part of like the core three that you normally get. And if you're not getting it, I think you should. But please have someone walk you through it to explain, because this is one of the most jargon ridden, financial statements I've ever seen if you're running it out of a QuickBooks Online or on bookkeeping platforms, because it's covered in accounting jargon. I promise you, though, it unlocks so many freaking breakthroughs for you if you know how to read it. And you don't even have to know how to read it. You just need someone to read it to you. Okay. So, statement of cash flows, key. Now, the other thing that cash flows infuse, which is really interesting, is timing. So, you could be a profitable business. For example, you could be recording revenue from your customers because you're invoicing them and you've done the work. If you're following something called the accrual basis of accounting, and you can tell because right on the face of your tax return, there's going to be a little checkbox that says accrual or cash. And if you're following accrual, this particularly applies to you. And if you're following accrual, it means that you're going to be recording that income and you're taxed on that income when you earn it, meaning AKA when you invoice it, right? So when you send out the invoice saying we've done our job and we're, sending this out for collection, then what ends up happening is your books show revenue. However, if your invoice says that money is due in maybe 30, 60 or so days, then, well, you're not going to collect that cash for several months. So imagine this, you're sending out an invoice in December, that's December revenue for 2024, let's say, but you're not collecting that income until 2025, then you're going to get taxed on that in 2024 without having collected that income. So you have to be mindful of cash flow infuses timing, because cash flow will happen in, say, February on revenue that increased your profit in December. So they're telling you different things, profit and cash flow. I personally find a cash flow forecast, AKA a cash flow map. If you take your beginning bank account and you map out week by week every expense that's going out, every income that's coming in, but also every loan payment, also every credit card, also every distribution, and every other thing that could happen to your bank account in between, this is one of the most enlightening things and the most useful tool, I think. It's the Swiss Army knife of business owners, the most useful thing that you could ever use in your business. I still update mine weekly. Being a CPA, being a CFO myself, if there's one thing I do every single week, it's when I run payroll and I determine exactly the amounts of money I'm going to be paying for payroll, I go in and I update my cash flow forecast and I do my entire week's worth of cash flow predicting. And I know exactly how much money I'm going to have the bank account next week, next month, next year, based on my plan. And I want this for you. I want this clarity for you. So please consider implementing something like this in your business. If you need help with it, hit me up and let's do a power session. I would love to help you with it. This is the paramount thing I do with everybody in power sessions. And it's so enlightening to just comb through the bank and credit card statements. I know it's a little scary, but it's so enlightening to realize where the money's been going and be able to stop the bleeding where you can. So if you're interested in that, please reach out. Let us know. Links in the show notes. But, regardless, if you simply have a new appreciation for cash flow, we've done our job. So profitability is one thing, but cash flow is what truly keeps your business running smoothly. It's not just about how much you make, it's about how much you can actually use to sustain and grow and maintain that cash in your control. When you book a power session with me, we can take a look at your payment cycles, your transaction timing, and your personal cash needs to make sure you're staying ahead of the curve. Managing cash flow is a constant process, but one of the most important pieces of the puzzle for a successful business. Find out more information about a power session with me to do your cash flow forecast in the show notes.